Hey, and welcome to the Crypto Club and Digital Assets Weekly Catch-up on Zoom. It is Sunday, the 31st March 2024, and this week, who knows what we're going to talk about. Every week is different. We hold these sessions every Sunday evening, 7 p.m. till 8 p.m. UK time, and they're open to everybody, novice and experts alike, which means we get a range of interesting views and conversations going. So there's going to be something for everybody, so stick around. If you enjoy this, do remember to click on the like, subscribe, make comments. Even better, come on to a future session. They're open to everybody, and there's details in the link below. So with that, let's see who's going to come and join us today. Anyway, how are you today?
Great, thank you.
Yeah?
Yes,
Still learning in the crypto world?
yes, always learning. This is impossible to stop.
Yeah, yeah.
Yes,
Well,
and I was reading and checking about. I didn't know about Bitcoin IRA. Is for retirement just in US. Bitcoin
yeah,
IRA is a retirement platform.
yeah. So it's got it here. It claims it's available on Google Play in the App Store, which usually means it's been checked in some way. And it is specifically for America.
Exactly,
It
that's
looks,
it. Yes,
yes,
but for America,
uh-huh. Which
uh,
mean which means it's
but
not available elsewhere.
but for
Um,
because but I can use the app if I want, right? Or maybe at the same, but when they ask when I have to fill out the data, I need to
yeah.
specify, no? That's it?
Well, this looks like the problem that it looks like it's available to US investors. So if you are a US investor, then maybe you can
No,
register
but
on
it's not,
this.
but I think that it's not the same to be an investor that a citizen. So this is one question.
Well, it looks as though you do have to be um, a US citizen to access
Citizen.
this.
Exactly. So this is not the same.
No. So
Okay, I was it
I presume you wouldn't be able to access it because it looks like the website consciously blocks non-US
exactly
IP
that. Yes.
addresses.
Hmm.
But
Hmm.
I just took a look using another facility in the
So,
US.
for
I went via a
example,
US server, yeah,
okay,
and that
and
let me in. But it looks like you when you register,
yes,
then it looks like you'd have to give your
exactly. This
address.
is there when once you are trying to register, not
Mhm.
just I don't think you're because you can you can write an address of an American citizen if you want, Gary, so you
Mhm.
can. I think that they will ask for an maybe for your ID or something like
Yeah,
identify yourself that you are a US citizen because if
correct.
on the other way is it it would be very easy, you know?
Yep. Yeah, I agree. So it does look like you have to be a US citizen in order to access it.
Okay. And another question
Hmm.
about this product. It is focused just for the retirement investments. So, but and for your portfolio, but for example, you and me
Hmm.
are not a retired person, so we can use this platform in case we were citizens. We can use this we can invest and add to our portfolio of
It,
as in the as not as a retiree, but just to have access to this Bitcoin on our retirement. Do you know what I mean?
it, yeah, it certainly looks like it's a way of having your pension plan, including Bitcoin.
Exactly. Yeah. It's something.
Yeah,
I was thinking about it. It could be similar to a pension plan,
yeah,
but crypto
yeah,
is similar. No, I think it's the same product, but in I mean crypto product, something like that.
yeah. So certainly, I don't know what the I stands for, but certainly it looks like it's a retirement account. So
Okay.
it'll be the equivalent of like a pension. I think the problem is going to be for most people, though, that it's only available by the look of it if you're a US citizen. And so unless you are a US citizen in the US, it looks like you may not be able to access it.
Mm-hmm.
Which is where it'd be interesting if other countries start introducing things like that as well. Because in the UK, there's an insurance, not an insurance, there's a pension wrapper called a SIPP, which is was it self-investment pension plan or something? And the idea is that you can put like stocks and shares into that towards your pension. And initially there was a SIPP in the UK. I think it was being run by a company called Hargreaves Lansdown, and that allowed you to put Bitcoin into it. But that was discontinued. The FCA wrote some rules, and I think Hargreaves Lansdown stopped it. So an interesting idea.
Yes, absolutely. Yes, it's why I'm asking for, because sometimes these apps or these products start for example, US, then China, and then I'm sure that it could be introduced in Europe, something like that. No?
Yeah, absolutely. And that's the hope, that European regulators will begin to accept crypto and start allowing certain regulated products like pension plans and investment funds to actually have a crypto exposure. But I don't think we're there yet. So I see Elena's joined us as well. Hey, Elena. Hey.
Hi, Elena. Okay, so
we're talking about pensions at the moment, and putting crypto into pensions, which is something that I know several people who are interested in.
In pension funds.
Mm-hmm.
Okay.
Yeah. So it looks like Gabriella, you're right. Bitcoin IRA is a retirement fund that you can put crypto into, but in order to use it, you do have to be a US citizen. And I know in the UK there was a SIPP, which has been discontinued. They're not allowed to put any more members into it or any more crypto into it. But I agree with you. I think over time, as the regulators start accommodating crypto more, you will start seeing this begin to happen. Particularly with like in the US, there's now the ETFs, so these are the electronic traded funds. So that's allowing hedge funds and that to get some exposure to crypto. It's inevitable that pensions will eventually go that way as well, I would hope.
Okay, I'm reading right now that is self-directed individual retirement account. Okay, and that allows Bitcoin, Ethereum, Litecoin, among others.
Okay. So that's definitely interesting. There's a reason to become a US citizen.
Exactly, but this is a crypto era.
Mm-hmm.
So it means that would have a Ethereum era as well, Litecoin era. I will check. Ethereum era. All right.
Okay.
Ethereum.
But it's probable that they allow certain well recognized ones in. Yeah.
Yes, it's Ethereum era.
And then if you're not a US citizen.
That's the problem.
No. So then the best advice would be just to buy a little crypto every month and hold on until the retirement age.
Well, again, should have big letters up here. This is not financial investment advice. Blah blah blah. But for now, that's unfortunately the problem. That a lot of people want to get some exposure to crypto, but for anyone who's in the crypto space, they'll admit that actually doing things like creating a wallet, setting up an account on an exchange, buying your first crypto, it's not an easy experience. Whereas if you had something like a pension plan into which you could put some crypto, so you just tell the pension firm, I'd like 5% exposure to Bitcoin or something, then that would allow a lot of people to have some crypto in their future savings plan without having to worry about all the complexity of their private keys and seed phrases and everything. But at the moment, the way that a lot of regulators have gone, and certainly in the UK, the FCA stopped what was known as a SIPP scheme. So this is it self-investment pension plan or something? So the whole idea was that you had a pension plan pot, which was managed by a UK FCA regulated company, and you could tell them to put Bitcoin into it. I think it was, and they've discontinued it, which is a shame, because that would be a great way of people getting some exposure to crypto without a lot of the risks associated with it, losing the keys and all this kind of thing. So yeah, you're right that for now, Elena, the only other approach is to buy crypto directly if you want some exposure on that. Yeah, or the other way is to buy shares in a company that's got a high percentage of crypto holdings. So this is what's beginning to happen with
MicroStrategy, for example. Okay.
Exactly.
Do you think it's a good idea? Do you think it's a good idea?
I'm not offering advice on whether anything's a good idea or a bad idea.
No, I'm not asking about your advice.
Yeah.
About your perception or how.
Yeah. So I think the idea that if you want to get exposure to the volatility of crypto without owning crypto, and instead having shares in a company where the shares are regulated and it's a regulated company, then going with something like MicroStrategy is definitely an option. It's one way of doing it, because it allows you to get that exposure. The other thing as well is that you can use products like, there's companies like eToro and Revolut. And eToro and Revolut allow you to have an exposure to crypto without owning the crypto itself. That's another way of doing it. And I don't know what the commission rates are or fees or terms and conditions are, but that's another way of doing it. So rather than holding crypto directly, having to have your own wallet, having to have your own private keys and all this kind of thing, then you can have an account with, I think eToro and Revolut certainly do it, where you can buy and sell exposure to crypto without owning crypto itself. So that's a couple of ways. And I'm sure over the next few years that there's going to be more and more options, hopefully.
Me as well. Yes.
What are more? Would you give us some more examples of the companies whose shares could be bought?
But I think my MicroStrategy is the main one that everybody's talking about, and that's simply because the CEO of the company, Michael Saylor, is a real fan of crypto. He did a really good talk a few weeks ago in, I think it was Madeira or somewhere, where he was talking about the future of crypto and the future of Bitcoin, and he's very upbeat about it. And so his company is a software analytics company. MicroStrategy is like business intelligence tools and that. And originally he started buying Bitcoin, not because he thought it was going to go up in price or anything. He said he was buying Bitcoin as a hedge against fiat currencies dropping. So what he's basically saying is that he's concerned that like the dollar, the pound, the euro or whatever, that their value is going to erode. And so the best way to protect his company from that was to have exposure in another asset class in some way. And he considered Bitcoin to be an asset class worth having some exposure to. So MicroStrategy is probably the main one that you'll hear people talking about. I'm not aware of any others. I'm sure there must be some, but they certainly be buying a lot. The other thing as well, certainly for people who are in the US, is you've had a launch of a number of what are called exchange traded funds. So these are products which people can buy, which again gives them exposure. In the States, there's about, I think it's 11 crypto ETFs now that have been launched by very big very well-known companies, the kind of like Grayscale, BlackRock side of company. Although I think one of them hasn't got any Bitcoin exposure. But that's not happened in the UK yet. I think there was a European ETF, but the name of which escapes me at the moment. But these are all kind of early stages. But I think these will come with time. And there may be others who may join later or may join another week who are better informed around that. I've never really taken an interest in those because I'm interested in the technology behind the crypto, not necessarily just about using crypto as an investment platform.
Yes, and Tesla owns as well?
Tesla, yeah. Tesla's interesting with Elon Musk, though.
Exactly. And NVIDIA as well, I think.
So, and NVIDIA have been hitting the press lately. And NVIDIA is a GPU chip maker. So a GPU is a graphics processor unit. So these are very, very high-powered microchips for computers. And so they're used for like gaming devices, which use really high-performance chips. But they're also used, GPUs are very good for mathematics processing. And what that means is that they tend to get used a lot in complex algorithms. So funnily enough, crypto mining is one of those. So you find some chips in there. But where NVIDIA is really growing at the moment is around artificial intelligence. And artificial intelligence tends to require a lot of computing power. And NVIDIA, with being a major chipset manufacturer, are aligning really, really well with like making chips for AI type things. And it was interesting that their last annual company performance report, they did a video of the CEO talking about the work that they were doing. And partway through the video, and they didn't say anything about it at the time, partway through, they flipped to an avatar of the CEO, but it still looked like completely the same person. It was an AI-generated version of the CEO talking about what they were doing, and then they flipped it back. And I think it wasn't until the end of the briefing that they actually said, don't know if you noticed, but partway back, that wasn't me speaking. That was an AI-generated version of me. So it shows the incredible power of these things now. I saw a demo video the other day that there's a graphics AI called Sora, S-O-R-A, and it's used for video image generation. And you can now create videos which are completely AI generated, but are photorealistic. So I think a group of kids did a video that's gone viral on YouTube, something like Mr. Airhead, I think it might be called. So if you do a search for, I think it's Mr. Airhead, S-O-R-A, Sora, and the video is all AI generated, and it looks completely photorealistic. And it's of this guy traveling around on a bicycle and doing various things, except his head is a balloon. So just like a little balloon, and it looks quite incredible. Well worth watching to see the advances in AI. So NVIDIA are very much well recognized at the moment as being a leader in the chipset manufacture space.
Yes.
And I'm doing a lot of stuff on that. So yeah, so they're less so into the crypto side of things. They're more into like chipset manufacture. So a very interesting company.
Yeah.
And that go on, Elena. Yeah.
So based on what you said just now, do you think artificial intelligence is the fastest developing field of technology at the moment? Faster, even more fast than the blockchain?
So yes and no. Okay. So when you look at how technology accelerates and evolves, it tends to adopt what's called a hockey stick type thing, where it goes up and then it suddenly shoots up. Okay. And I think that's what we're seeing with AI now. So if I said to you, how long has blockchain been around? Roughly how old do you think blockchain technology is?
Since 2008?
Yeah, but most people would say, like, I think multi-chain was probably the original blockchain type thing, but certainly, you know, the Bitcoin white paper was 2008, 2009. So yeah, you're right. Most people for blockchain around about 2008. So it's what, 15 years old, just over. Do you know when artificial intelligence started?
70 or so years ago.
Yeah, 1956, I think it was. It was first talked about at the Dartmouth conference in the USA, and that's where it was a group of scientists or engineers who got together to talk about using technology to emulate intelligence, and that's where the term artificial intelligence came around. So AI has been around for 70 odd years, but it's only in the last 10 years we've started to see things change. And in the last 3 to 4 years, we're really seeing a change. So if you look at, in particular, the use of generative AI, so you've probably heard of OpenAI. OpenAI is the company that created, or the organization that created ChatGPT. You know, and ChatGPT, I think, started making the news about a year or so ago, when that was first launched. And that was a large language model. So basically, it's got loads and loads of data, billions of rows of data, and it does statistics on what the most likely next word is in a sentence, paragraph, whatever. And ChatGPT, GPT-3 came out, I think it was a year or so ago, and that really caught everyone's imagination. And that's where everyone started saying, "Oh, wow!"
And it felt like a huge sensation.
Correct. Yeah. And it felt as though it had come from nowhere, because it was interesting that last year everyone was saying, "Hey, what's happened to blockchain? It's been around for ages and it's not getting anywhere." Whereas this new AI, it's really, really taken off. It's like, well, AI's been around 70 years, blockchain's been around 10 years at that time. So yeah, so you've got ChatGPT. There's a newer version of ChatGPT which is using, I think it's GPT-4 or GPT-4.5 is the model, basically how much data it can hold and how complex it is. And then you've got things like DALL-E, which is a image AI, which is incredible. If you want to do pictures and this kind of thing, using AI, it does that. You've got Sora, however you pronounce it, which is like a video generation AI. That is incredible. It really is. And I saw there was an announcement there's a big American film and studio producer who was about to build, I think it was a 16-stage studio in the States, and he's cancelled the project. He said, "I've seen what AI can do, and I'm not going to need studios." You know, he said the pace at which AI is going is so amazing that we're not going to need studios. It's all going to be AI generated. So interesting stuff. And then all of this as well ties in with the metaverse again, because it all comes together. You think about the metaverse, which is like a digital twin. It's a lot of it is imagery and walking through places and tokens and that. It all starts linking together again. So yeah. Quite timely, in fact, to see Christopher's joining us as well. Maybe he can talk a bit more about this if he comes off mute.
Sorry, I just realised I was in mute. Good evening. All right. Hey. There's two Garys and there's a G. Is that 3 of you?
It's me on my mobile and me on the screen, and Gabriella.
Gabriella. Okay. Excellent. Hi, Alina. Yeah. I mean, artificial intelligence is permeating through the whole infrastructure of everything now, and and even though we shouldn't fear for our jobs, as they say, I do think it creates a lot of inefficiencies in the workplace and in the industry that we've always had. So it makes us more productive in a way, but also I think it takes away a lot of the manual type of work that I think a lot of companies in the industry relied on. And even in the developing countries, I think I've been going back and forth last year to Saudi Arabia, and Saudi Arabia is actually known as a real AI hub for innovation and engineers and data science and all those type of things. And I just got off a call. We're using AI for trading now, and I didn't realize that AI was or bots, as they call them, was responsible for 90% of trades.
Yep.
Yeah.
On the stock exchanges.
Um, not okay. Stock exchange is just a normal exchange of assets if it's a certificate or trade on the order book. But I'm just talking about in more or less the retail as well as maybe some institutional trading as well, where what you're looking at is it's a Greg Secker. Do you know who Greg Secker is?
Yep.
Yeah,
Yep.
he's all over YouTube. I met him almost 20 years ago at an event, and it was all learning, the technical analysis and all that data you need to understand to put on a trade. AI takes care of that.
Yep.
It takes care of that. Yeah, so
yeah. Greg, I think I went on one of his trading courses. Again, it must have been about 20 years ago, and he's now transitioning into looking at different ways of doing the trading now. But you're right. I mean, he used to be very much of the whole fundamental analysis to choose the right stock, technical analysis to choose the right time to buy the stock, and all this kind of stuff. And you're right. AI is definitely exploded in that way. But then algorithmic trading has been around for many years, and you've got algorithmic trading, which is basically having a formula to determine when to buy and sell. AI is just a further iteration of that. Really, it's just learning from those lessons, because there was a flash crash on one of the US exchanges. It was prior to 2008. It might have been, can't remember which year it was, but it was fascinating. There was actually a flash crash, and that's where the whole stock exchange collapsed briefly because of algorithmic trading. Because one of the challenges you get is that if you've got some software that says, when something hits a certain price, then buy, when it hits another price, then sell. What you can have is, if you've got lots of these bots all doing these automatic executions, then they start bouncing off against each other, and you end up with a cascade effect. And that's what caused this flash crash, where the market completely crashed at one point, because the shares were going down in price across, whether it was I think it was the NASDAQ, so one of the US exchanges. And when the prices of some of the shares dropped below a certain level, all the bots said sell. Of course, when you sell, that causes the price to drop more, which then meant the other bots said, oh, that's already going down, sell, which then caused the other bots to go, oh, the price has gone down, sell. And they basically sold. And at the same time, the bots that were responsible for buying were saying, I'm not buying, the price is going down. And this is where you ended up with this gap in the market where everyone was selling and no one was buying. So you've got a liquidity crisis then as well. And that's where I think they actually suspended trading for like half an hour or something while they let it all settle down, that kind of thing. But yeah, there's some interesting videos on it. And AI is just an extension of that, really. It's taking the algorithm and now it's applying learning to keep modifying its algorithm, which is quite nice. But yeah, I think most stock market trading now is algorithmic driven AI. Less so on the crypto side, I believe, but I'm not sure. So,
well, yeah, I mean, the crypto side is moving towards that. I sent a little broadcast to my list of people. I think he was one of them on this new AI. It's called Algo Neuro Trading. It's like it's using a form of trading that also does long and short automatic trading. So it really does mitigate a lot of the risk. But end of the day, there's no guarantees. With this type of thing. So yeah.
Absolutely, and you're right. You've got all sorts of things. So you've got NLP, which is natural language processing, which means that you can take in words and you can work out the meaning of the words and all this kind of thing. There is so much. So some of the stuff I saw, I think it was about 3 years ago, was an interesting one, where that they'd basically fed in all of the decisions of US courts on court cases. And the US is quite good because obviously you've got 50 states and they've all got their different courts and that, but they actually feed in the results of all court cases, and they include who the defense was, who the prosecution was, who the judge was, and what the decision was. And this company was doing analytics to identify if you've got a big court case coming up and then the name of the judge or the prosecutor is announced, then what is the probability of a win or a loss for the plaintiff? And I thought, oh, that's really interesting from a legal perspective. But they were using it for a completely different reason. And what it was, they were using it to predict future share prices. So if I can see the expression on your face. So think of a hypothetical example of a major aircraft manufacturer who's having problems with their airplanes, okay? Mm-hmm. And say there's a big action over, say, an airplane that lost, say, hypothetically, a door while it's in flight over somewhere, for example. And say, hypothetically, there's a court case, and the outcome of that could lead to billions of dollars of compensation, the orders for your airplane collapsing, your share price going down and everything. And so this company was doing it so that as soon as they knew who the prosecutor and who the judge was, they could then work out what the likely outcome of that court case would be and then short the shares. Because obviously if the share price is going to go down if they lose the court case. So they were using it for share price prediction on the basis of court cases, which is quite interestingly different.
Yeah, well, if you looked at the leader of the Prime Minister before, Rishi, what's her name? Liz Truss.
Liz Truss, yeah.
The Liz Truss effect, the 39 days, if you would have shorted the British pound during that period, you would have made a fortune, which a lot of people did.
Yeah, absolutely.
Yeah.
But as you say, you can't always predict I love the saying from, I think, was it a baseball player, Yogi Berra? Or some name like that, who once said it's predictions really difficult, particularly when it's about the future. Which, when you think about it, it's like, okay, that's quite funny. But certainly, if you're looking at future prices and that kind of thing, definitely that. So,
yeah, absolutely. So what? Obviously, you talked about AI and metaverse. I just jumped in.
Yeah. No, it was really timely because we're talking about getting exposure to crypto, first of all, without necessarily having crypto. So this is where companies like MicroStrategy, who are a software analytics company, but they've got loads of Bitcoin on their balance sheet. And so a way of getting exposure to crypto is buying MicroStrategy shares. And then Gabriel mentioned NVIDIA. NVIDIA is a chipset manufacturer, really highly renowned, super powerful chips, and the chips are being used in AI devices because there's a lot of computational complexity there. And that's where you start looking at the metaverse, where that's got a lot of graphics and imagery and everything, which is GPU based, which NVIDIA are a leader of. Then you've got the AI level, which is using a lot of compute power, which NVIDIA is a leader of. It all starts coming together type thing. So it's fascinating stuff.
Yeah, well, I mean, all those mining rigs that were more or less are defunct now, that are quite cheap in the market, that can be used for something else. And I just feel that when it comes down to crypto and it comes down to virtual assets, we're just at the beginning. There's so much more money coming into the market. I just posted something in one of my groups on the trend of the next 5-6 years of virtual assets and the amount of money coming into it. and it really is going to it could be the last big bull run, I would say, before the institutionalized competitors or participants really start to try and monopolize the supply of some of the big virtual assets. That's my opinion.
I think you may be right. The other thing as well that I sent out a note on this when I was just mentioning that this event on a few channels earlier on is the growth in stable coins as well at the moment. I was looking at some numbers on that earlier on. I can't find it to hand at the moment. But stable coins, which by the nature of the fact that their price doesn't change, but their market cap is growing and growing, which means that there's more and more stable coins being used. And stable coins is something that people tend to use for trading and for entering and exiting into crypto in some way. And so I think that's an indication of just the general continued growth in use of crypto in some way. So what it means is that you can use that to show the growth in crypto without looking at prices. So most people look at the market cap of, say, Bitcoin. Well, you could have fewer and fewer people using Bitcoin, but if the price is going up, the market cap is increasing. Whereas with stable coins, because they stay at the same price, if the market cap of stable coins is increasing, it means there are more and more of them coming into circulation. And so for me, that suggests that the whole market's growing. So that's just a viewpoint. I see we've just been joined by Yemi as well. Hey, Yemi.
Hi guys. Yeah. I just saw the link on one of the WhatsApp group.
Okay.
And I was kind of curious on what this topic is about.
Okay.
I saw that you mentioned something about POOP. And
oh yes.
I just wanted to know a bit more about it. Yeah. But well, I believe you get the recording for us at some point in time.
Yeah. So we haven't specifically talked about poop coin as it's known.
Okay.
We're just talking about general things really about the markets and what's happening. So there's loads of these meme coins whether it started off with like Dogecoin originally. There's now cat coin, and I think there's one that was launched which I happened to mention just to draw attention and get people interested really, where there's a new one called poop coin. I'm not sure what it's at the moment. I saw some numbers on it earlier on. I just find that the whole meme coin space to be entertaining. Because it goes to show how I know there are some people who are really serious and say, well, you should be looking at what the product is and what the white paper says and what the team's about and all this kind of thing. Whereas meme coins are just living proof that some people make money just by choosing something silly and it randomly goes up. It's a bit like horse race betting and greyhound race betting, where some people study the form of the horse and what its weight is and how it's done on previous meetings and that. And some people just go, that's a pretty looking horse. And that's the one that wins kind of thing. And I know people who do that. And I think that's the case with a lot of meme coins, that they've got no value, they've got no utility, they've got no purpose. But if enough people get together and go, oh, that looks really interesting, then the price goes up, and that's it. So what's your interest, Yemi?
Well, I've dabbled into crypto, and I used to write applications on the blockchain years ago. So I used to be a developer, but I don't code anymore.
Okay.
So yeah.
Why is that, you mean? I mean, I thought developers were hot cakes, hot potatoes at the moment.
Yeah, well, it's a very long story, because my background, I mean, I started coding in the early days of Java in the 90s, late 90s. And then I moved into software implementation. So I'll probably say around 2016, I started to look at the development on blockchain. And I started to put together some prototypes. And I was using Ethereum as my base. But so the reason why I stopped that project was because it couldn't scale. So what I developed was a way of not using credit cards for travel expenses for corporates. So you get into so it means that all the suppliers are going to be on the blockchain. So and then you write your own, basically your coin, a way of accepting payments, which is secured. So you have smart contracts, which you engage with the hotels, the taxi company, the airline. So everything that the traveler is going to use, the corporate traveler is going to use. So they will actually have a smart contract, and I prototyped it on a blockchain, but I couldn't find the resources to scale it, and I just abandoned the project. It was going to be very expensive, and then also the speed of transactions. It was taking almost 30 minutes. I mean, you can imagine you want to take a taxi. You can't get out of a taxi for 30 minutes. So it just didn't make sense. But I can see now that there's a lot of stuff in the market, which wasn't there in 2016 when I started to write this, that could make that implementation a lot easier. Yeah.
I think that's the interesting thing. We were saying with Elena earlier on about technology innovation and how it has this hockey stick effect where things get faster and faster all of a sudden. And I think that's beginning to happen with blockchain type technology. So you look at Solana, where Solana's offering a lot more performance than that. And going back to, interestingly enough, Chris was asking why you moved away from the smart contract stuff. Well, funnily enough, AI is one of the reasons why some people are moving away, because you can now get AI to write a smart contract for you.
Correct.
Now, Now, whether you trust that is another story. But then I've seen enough smart contracts written by human beings that have been, bug ridden, have been faulty, have not been tested properly. So the idea of getting an AI created one, it isn't such a bad thing. Because at least there, if you can train it to make sure it doesn't follow certain patterns which are known for exploits and that kind of thing, then you could actually get AI to write a more resilient code, which means that the future of developers is going to be a little bit more limited.
Correct. Yeah.
But then, I've been in the technology industry long enough to see loads of people lose their jobs because of whatever technology has been introduced, but have then got newer jobs because of what technology has enabled. So I developed loads of stuff, must be 30 years ago now, around barcode technology. And barcoding, we're still only just using QR codes and that, and we're now self-scanning at the checkout in the supermarket. That's 30 years after the technology became available and that. So I think AI is going to be something that is going to replace some jobs and is going to augment other jobs. And it's also going to create new jobs as well. It's like the phrase that amuses me at the moment is prompt engineering.
Yeah.
Which is this whole idea of you're training the AI how to respond better, which actually you're not. What you're doing is the AI is training you in how to write better queries. It's just that everyone thinks that that they're being clever and they're not. So if anyone's done anything with ChatGPT or any of the products, they'll know that how you write a question can affect the output that you get. Well, why don't they automate teaching how to do that so it'll do it itself? So I think prompt engineering will disappear because I think you'll actually get the AI to write its own prompts eventually. So come back to the smart contract thing, then it should be just like how you can now take a picture of a web page and you can say to the AI, go and write the HTML to code this site. Then there's no reason why you couldn't do something similar with a smart contract. But whether it'll be effective or efficient, different story. That's why we still need humans.
Yeah. It's a very big area, and recently I've started to see a number of companies. I'm talking about the large companies who have the funding to pay for development in that area. I mean, it's starting to develop applications that are scaling using blockchain. And that's really quite interesting. And the future is going to be really bright in that area. It's the implementation and the use of it. So for me, crypto, I don't see crypto as a tool for buying and selling as assets, even though that's part of it. I came in as a developer to use it to pay for services on a smart contract, which was another way of looking at it. But it's very interesting that people can put value on something that is an enabler for me.
That's what I've always found funny, that ultimately I think of blockchain and crypto as being it's a platform, it's a capability, it's technology enabling things. And some people have gone, oh, if I collect some of that, it increases in value, so I'm going to collect it. So it's funny, this is where you get this whole conversation about, is crypto a store of value? Is it a means of value transfer? Is it whatever? And my answer is, it's whatever it is for the person who's bought it. So if some people have bought it because they think it's going to go up in value, it's a store of value. If some people have bought it so it means that they can trade internationally and pay lower commission fees, then it's a value transfer facility. If people want to price things in Bitcoin, then it's a unit of accounting. So there's all these things, really. So I think it's fascinating. But I think you're right as well, Yemi, that I sense that there's about to be a second evolution of blockchain, of the next generation of blockchain capabilities that are going to start providing what the original blockchains claimed they were going to. So the whole performance, the speed, the low cost of transactions, all that kind of thing. And that's going to see an acceleration with what I think, Chris, you were mentioning before as well, things like real world assets. We are just at the beginning of that. So the whole tokenization of whether it's stocks and shares or property or fine art or precious metals, fractional ownership things, I think there's going to be a lot more of that still. So we'll see where we go.
Yeah, and we ain't got long, actually, about 6 minutes. But when it comes to the token economy, and the way I look at Web3 is this: it's going to be more of a customer-centric world over time, as corporations realize that profit sharing and giving access to a wider audience of people with tokenization to enable ownership, participation. And for entrepreneurs to realize that they don't need to go through a central body to access a worldwide economy that can have. I'm working on the projects that allows a worldwide audience to have access to a particular stream of new types of business streams or income streams that they never would have had before. So it's all about community, enabling, empowering the world's population of 7-8 billion people around the world. So yeah, it'd be really interesting to see what applications and what use case innovation takes place.
Definitely. So you've just been joined by Ken as well. Hey, Ken, what brings you along today?
Yeah, just popping in just to see what's going on, listen to the conversations.
We've been having a real mixture of things today. Been talking about, where did we start off? It was some general crypto stuff, then a lot about AI this week, actually. And there's a big intersection of AI and crypto in many ways. And then there's the metaverse. There's so many things going on It's a fascinating space. What's your area of interest?
Yeah, I mean, Web3, generally, as usual, and just basically on crypto in general.
Hmm? It's quite wide ranging, that.
Yeah.
Yeah.
So I mean, my main focus at the moment though is I'm not really a believer in in layer twos,
Hmm.
where Ethereum's moving into layer twos. So I'm kind of like looking into more into the development of layer ones, L1s,
Yeah.
because layer two is centralized basically. So that's why.
Well, I think did we have this conversation? Was it last week or something
Yeah.
about Denken and
Yeah, after the Pro Duncan upgrade that happened a couple of weeks ago.
yeah, and the whole thing that as soon as you go onto a layer two solution, you're missing the point of a blockchain solution. That
Yeah,
you're basically moving the problem off chain and moving away
and
from it.
also the fact that to decentralize layer twos, you just have the same engineering problem as you would do decentralizing layer ones. So it's not really it doesn't resolve the trilemma issue of that you have with blockchains, which is the decentralization, security, and scalability. So Ethereum has done the first two, and they're really struggling with the third one. And I personally don't think that it's been resolved with layer twos.
Well, it does feel as though you're just moving the problem elsewhere. Because when we're talking about sharding and scalability and different ways of using sharding as well,
Yeah,
uh,
yeah, we were because
uh,
I mean, even I mean, uh, the Duncan upgrade is actually sharding. It's proto dunk sharding, which is like half sharding of the data structure. Full dunk sharding, I think Ethereum roadmap says 2027, so you could probably say 2030. Execution sharding has been literally, it was in a white paper, but it's just been thrown away really. And yeah, and there's within the community, there's a lot of talk that they might not even get as far as full dank sharding. That's why you've got product dank sharding, going to have the full dank sharding, hopefully, what they say in 2027. But I was in the same, I think we were in the same, was it 2018, me and you, when Vitalik spoke down at the
yeah,
London, the University of London. Yeah.
East London, yeah,
Yeah,
with him, and I think
2018.
Gav Woods was there as well, wasn't
Yeah,
he?
yeah. And dank sharding was supposed to be done by 2020, well, 2019 really. And it's just proto dank sharding has just gone live. So dank sharding is not even gone live. And yeah, so but then you got the other people coming up with these parallel execution systems. You've got Solana, which everybody loves. Well, if you're a meme
Mhm.
coiner, you might meme coiners love it. But I don't think Solana is decentralized.
Mhm.
I don't think anybody thinks Solana is I mean, you cannot have a decentralized system when it goes down. You've got a Twitter account that actually says, "Okay, we're working on getting up and running and so forth." It's just like I don't know. It's just like think of any Facebook goes down, they'll probably post
Yep.
on a Twitter page and say, okay, we're working on bringing it up. So at the moment, but a lot of these projects do say they're going to try to decentralize over time. I think I told you last time about Vitalik's solution, which is that layer 2 should use the same sequencer,
Hmm.
which obviously gives the same engineering problem as you would in layer ones. So I don't think it's going to happen. And there is also the other issue, which I think, there is personally, I think there's a place for layer twos. And my example that I can give for this is Base, which is owned by Coinbase. So
Yeah.
Base is layer two, which at the moment you go there and it's doing fantastic. But the reason Coinbase built on Base, which is on the OP stack, optimism, is because you control the sequencing. And by controlling the sequencing, you can decide which transactions go through and which ones don't.
Okay.
Coinbase being listed on a stock exchange, they have a lot of rules and laws they have to actually adhere to. They can't be dealing with decentralization. So because of that, that's why they went for the layer 2, where they can control. So for example, they can block transactions they don't want, they can reverse transactions and so forth. The layer 2 groups that are trying to decentralize, like the top of my head, what can I think of? I can think of Espresso Systems or Astria. But they all have the same solutions. All they're doing is they're sequencing. They're saying, come and use the centralized sequencing. I think Astria have got a few projects building on it, on the shared secret, because it's really easy to build on there. You get the sequencing, you go there and you can just build your app. I mean, from an engineering point of view, it's very good, but it's not decentralization. It depends. If you're in first principles, which is decentralization, then it's not. It depends. Yeah, it's not good. It depends what solution you want.
Yeah.
And I can see why Base goes for layer 2.
I think that'd be an interesting conversation to follow up on maybe next week, as we're out of time now, because I do find that people quite often get mixed up about what do we mean by decentralization and what do we mean by distributed, and they get them confused in that. So I'm going to have to call a halt, unfortunately, because the time zones have changed and we're out of time for this week. So definitely be good to catch up again and follow on that a little bit further, maybe in a future week. Be really interesting. But meanwhile, gonna have to close off for the day and say thank you everyone for joining. Different conversation this week. You know, some weeks we've just talked about Bitcoin or FTX or whatever, and this time it was all about AI and the intersection and everything. So thanks everyone for coming. Hope to see you again next week.
Thank you. Very good session. Interesting. Thank you.
Okay, bye now.
Bye. Bye.